Welcome everyone. Brian Hoops here with Midwest Market Solutions. This is our trading webinar, and it is Thursday, June the 7th. Markets have closed, and Jerry Welch from our branch office in Montana has taken some time out of his day to join us. And first time you're on our webinar with us, Jerry, welcome. Great to have you along with us.
Well, I'm thrilled that you invited me, and I hope I can come up with something that's wise.
Oh, I know you will, Jerry. No doubt about that. I've got Jerry and I work together through Midwest Market Solutions, but we do have separate websites. Of course, our company Midwest Market Solutions website listed there on the screen. Jerry has his own website, commodityinsight.com, and he has just recently released a book. And Jerry, tell us about the book that you've been writing.
Well, my book is a compilation of the different various newspaper columns I've been writing for, 35 years. My newspaper column deals with the commodity markets, and it's the longest running commodity column ever. And it's published in a couple of large weekly agriculture papers, the largest of which is the Illinois Agri-News out of LaSalle, Illinois. They've been publishing it for over 30 years. Then I write for a newspaper called Cattle Today out of Fayetteville, Alabama. They've been running it, they tell me, for 25 years now. I've done it without interruption. So every Friday I put together a newspaper column. I send it to the newspapers. They publish it usually the following Thursday. And then on Saturday morning, I send it to my brokerage clients and people that subscribe to my newsletter. Now, my newspaper column, it's entitled Commodity Insight, and it covers the futures market. And I don't think anybody has ever written about what I call the big four: stocks, bonds, currencies, and commodities on a weekly basis for this long. So I came out with a book here a few months ago called Haunted by Markets. And this particular book covers the years 1990 to 2015. And I also have a book entitled Back to the Futures, which covers the 1980s. But this book here is a pretty good one. It's, I think it is. I'm getting very good feedback on it. And you learn about the history of markets. And when you're trading, that's one of my top 3 rules for trading is know your history before you get involved with this stuff. So my book, Haunted by Markets, covers the years 1990 to 2015. And it's week by week, various columns that I've composed.
Excellent. How long have you been around in the commodity markets? When did you first get your start?
Oh gosh, I was in the business in the early 1970s, before everything went bonkers to the upside due to the Russians coming in here and the Russian grain robbery, where they walked in and ended up buying all the U.S. grain, and then all of a sudden we had the bull market in 72. And so I've been in the business in the early 1970s, and except for serving in the Missouri legislature for one term, this is all I've done. So I've been around for a long time. I've seen just about every dog and pony show there is when it comes to stocks, bonds, currencies, and commodities.
Absolutely. I read your newsletter that you send out. Sometimes it's multiple times a day for clients, and I read that, and you've got some tremendous information in it, Jerry. As I said, we work together through the company, and there's a little bit of information about Midwest markets there, but people can subscribe to your newsletter. They can buy your book. You can do this all from your website, which is Commodity Insight. And tell us a little bit about your newsletter. We're going to get going into our webinar.
Well, my newsletter I call it a twice-a-day newsletter, because if you're trading in a futures market, what you're looking at when the market's open at, let's say, 9 in the morning, can be vastly different than what you're looking at, 5 minutes before the close. So my newsletter comes out twice a day. My first broadcast comes out around 7 o'clock in the morning Chicago time. My second broadcast comes out just before 11 Chicago time. But here's the problem. You've got so much volatility in these markets, and all markets, stocks, bonds, currencies, and commodities, that things will unfold during the day. And if they do, I send out what I call special email alerts. And anymore, sometimes I'm sending out 2 or 3 of those a day. So not only do you get 2 broadcasts a day, but during the day, if I see something that excites me, depresses me, that I think a client needs to know about, I send out an email. And so I keep people on top of things as much as I possibly can based on the volatility that's swamping every market on the board. You're looking at unprecedented volatility in the commodity markets, primarily due to the advent of high frequency trading, which is a relatively new phenomena, but also the establishment, the creation of commodity funds that didn't kick into gear until the year 2000. So, if you're not on top of these markets hourly, you're at a disadvantage. So my newsletter comes out twice a day, and then during the day, depending upon circumstances, I send out special email alerts. And today I think I had 2 of them. So.
Yeah, you do do a tremendous job on your newsletters and communicating with your clients. You and I are going to talk about 3 markets, and I know a lot of your focus is on trading and making some money in the markets. You do a great job with your clients. 3 markets we're going to choose. The first one here, this is a chart of December cattle, kind of give clients an overview of what you see. Before we do that, tell me, are you more of a fundamentalist, a technician? What does Jerry Welch look at when he makes his recommendations?
All my work is fundamental in nature. I don't get caught up in the red line over the blue line or any of that stuff. When I got in this business, you did not even have handheld calculators. Computers were a thing of that was science fiction. So when I got into business, I worked for a fellow named Roy Longstreet, who wrote a book called Viewpoints of the Commodity Trader. And Mr. Longstreet's book, Viewpoints of a Commodity Trader, is considered a classic. And he hired me. I worked with him for a number of years. And when he retired, he continued to run his brokerage business through me. Now, Mr. Longstreet was the primary hedging, quote unquote, person for Ralston Purina. And he knew the Danforth family real well. So, I was introduced in this business not because of computers and all that, but fundamentals. You had to know why a market went up, why it goes down. You had to understand ending stocks, ending supplies, and so forth. So my work is all fundamental oriented. Now, I don't ignore the technicals. If I see something that's going on technically that I know the commodity funds or the high frequency boys are going to rush for, I let everybody know that. But I won't get involved in the market unless I feel I have a good understanding of the fundamentals and where prices are going to end up down the road.
All right. So a couple markets that you've chosen is cattle and hogs, and we want to look at both December cattle, December hogs. But listeners should know that you're not just looking at livestock. You have done a tremendous job in grains. You had some long Kansas City wheat versus short corn spreads that did tremendous. You were long Kansas City wheat outright. You've been long oats at the right time. So you've done a great job on the grains as well. But today we're looking at, first of all, December cattle. Tell us what you see from a fundamental standpoint, and then from technical or trading standpoint.
Well, the big picture in commodity in the big 4, stocks, bonds, currencies, and commodities, is the simple fact that the Federal Reserve wants to hike. They are hiking rates, and they're promising to hike more because of job creation. And not only is the U.S. economy the strongest economy in the world, but a lot of these emerging countries are starting to see some solid growth. So the Fed's hiking rates. You got to understand, higher rates is only positive for one market based on history, and that's the dollar. So when you start getting into these markets and you start to try to buy strength, you got to understand the Fed wants these markets down. Now, if I had to point to a couple of commodities where the fundamentals are so overwhelmingly negative and you've got a shot for a real home run, it'd be the livestock. All these USDA reports suggest a wall of cattle coming into starting in late summer into the fall, and the same thing with the hog market. So, my approach to the livestock complex has been very simple here for over a year. I will not buy a break. I'll only sell rallies. And, I still think my work suggests that back month December cattle have got $1 written all over them. And if it really gets kind of goofy, you could get these December cattle under $1 back down to around 95 or 96, which may seem like heresy right now. But remember, in 2016, they did get down to 96. So number one, I won't buy livestock. I'm certainly not going to buy the cattle market. I'll only sell rallies. And my downside target for December cattle is 100, and it could get down to 95.
Okay, and that's going to surprise a lot of people who, if you're just a technician, you're going to look at this right here, what I just drew. This 107 area has a double bottom, and prices should move higher. But I know this rally here, this last couple days, you're a seller right up in there where I drew that yellow box, right?
Yeah, I think it's going to be very. We sold this December cattle several times, and when those December cattle were up around that 117 to 118 level earlier in the year, and I was talking cattle going down to 105, I literally got hate mail. But the market did. It went all the way down to 107. Well, it went to 96 and then bounced pretty good. But again, if the USDA is correct, and they are more correct than wrong, you should see a wall of cattle coming in here. And if it continues to be hot in the plains, you got a chance to see producers liquidate some more of their herds, and you could very well get this cattle market tumbling badly. My feeling is last week's high in the cattle market was an important high. And I did suggest more sales in here yesterday and today. And the market closed kind of anemically, to say the least. The thing about the cattle market, well, the livestock in general, but in particular cattle, the hot money boys, the high frequency traders, they love this cattle market. It gives you big moves. It's not like corn. It took corn 3 months to move 40 cents. Heck, we've seen that big of a move in feeder cattle during the day. Yeah. Unless the USDA changes their opinion about where they think this cattle market's going, and some of my cattle contacts, I would not buy cattle. I'd sit there and wait for the rallies to run out of steam and then sell them. And, again, let me just say this. I write for a newspaper called Cattle Today. I've been doing that for 25 years, and they're out of Fayetteville, Alabama, so they like my stuff as well.
So I'm drawing an arrow here on the chart. From this area, you expect prices to start to weaken as we go into the summer, and eventually this 107 area is going to be taken out. The old technician told me one time, double bottoms hold, but triple bottoms never do. So if we do go test this 107 area, we're likely to go right through it, aren't we?
Well, my downside target for December cattle is $1, and I think under the right circumstances, you could go down to 95. A lot's going to depend upon, how much total meat we have in the market. Right now, it looks like you can have meat supplies 20% bigger than a year ago. Beef supplies. You're going to see a record amount of beef in the market. You've already got a record amount of poultry in the market. You're going to have a record amount of pork. So, and again, you get the right circumstances there falling into line, you can easily go, in my opinion, you can go to $1, you can go lower. So again, I think this cattle market and the hog market, in terms of probability and in terms of profitability, are two of the better trades on the board.
Very good. Is there a point on the chart that if things changed fundamentally, if demand picked up, if cattle weights dropped enough to indicate that supplies are shrinking, is there a point on the charts that you would say things have changed and you're going to change your opinion? Is there a breakout point where the charts may tell you that, or will it be fundamentally first, Jerry?
Well, what I have been telling people is that if we're lucky, you're going to get this cattle market down low enough where late this fall, early winter, you could have one of the better buying opportunities we've seen in a long time in cattle. And, as long as you have job creation going on, the economy's okay, you just got to wade through this wall of cattle. And this wall of cattle, unless, we see something change, and I don't envision that, you get these cattle down to $1, they could be heck of a buying opportunity. But I don't see that happening. I mean, you just got a ton of meat going to hit this market, beef, pork, and poultry, and a potential for maybe some herd liquidation. I am not negative on commodities per se going into 2019, but between now and then, this thing could go down a lot lower than people imagine and then give you a good buying opportunity. But I'm just only selling rallies. I'm not going to mess with the long side.
Very good. Let's look at December hogs, Jerry. Kind of the same thing here, but except we've got more of a pronounced downtrend. I drew a trend line from the highs in February and another high in April. December hogs, this is a chart of December hogs, Christmas hogs. They've rallied here off of making contract lows just earlier this week. Now we're back up into this resistance. Is this another selling opportunity here on this rally?
Yeah, what I've been telling people is I doubt that December hogs can close over 60. Now, some of my favorite people that I like think you could go to 62, but I think you're going to struggle at 60 like you've seen here since late April. And remember, the only commodity I can see on the board that fell to contract lows within the last couple of days is December hogs. They hit contract lows and they come roaring up out of the hole. And and so again, to get a market to go to contract lows is hard to do. And there's a reason they're there. And I think that reason is that you continue to see hog producers fortunate enough to have cheap corn, and you continue to see herd expansion. You see pigs per litter continue to rise, and that's not going to change. This hog market's got a shot to go even a lot lower in 2019. And probably one of the better trades on the board late this year is probably going to be buying cattle and selling hogs, because the cattle could rally sharply from 100 to maybe 96, but the hog market's going to stumble all the way through 2019. Now, the big caveat on that is going to be if China decides to come in here and buy U.S. hogs, but they've already said they're not going to do it. So I wouldn't hold my breath on China buying hogs to supporting the futures market. So I look for December hogs to stay below 60. I think they could go back to where they were 2-3 days ago, which was contract lows, and that market's going to struggle for the next, well into 2019.
Very good. All right.
My downside target for hogs is $50, but I honestly believe you got a shot to go to 45. And 45 puts hogs back to where they were in 2016, just like in 2016, cattle were down around 96. So, 45 on hogs, hey, you were there 2 years ago. You could do it again.
Yeah, it's not out of the realm of possibility. That's absolutely correct, Jerry. So, okay, so a couple good setup markets here. Hogs, cattle, both have seen some rallies in the last couple days, but these are probably selling opportunities. Last market we're going to look at here is Treasury bonds. I pulled up a September chart. Big outside day higher here. We've had a huge rally off of, I think, contract lows from May. Then we rallied sharply in about, 7-8 trading days and pulled back. What's going on with bond futures and interest rates?
Well, I think the bond market is a bubble of historic proportions. I mean, that's another market you simply don't want to buy. There's going to come a time that this bond market is going to focus on this job creation and coming inflation, and they'll annihilate that bond market. So bond market, I treat the bond market like I treat cattle and hogs. I'm not going to buy bonds. It's not going to happen. You sit tight and wait long enough for a good rally. You've got about three markets, in my opinion, you've got 3 or 4 markets up here that are key to all other markets. One is corn. Corn is a very important market, and when corn, it oftentimes dictates where other commodities go. Another one is crude oil. As crude goes, so go most commodities. But the other one, and the big one, biggest dog in the block, is interest rates. It's bonds. And when you got the Fed hiking rates, they're going to send bonds lower at some point in time. It's just a matter of when the bubble pops. But bonds have been going up for over 40 years. It's only been within the last year you're starting to see signs of a top. And I would only approach bonds from the sell side of the ledger. Would not buy them. And once these bonds start to tumble, and I don't look for a significant drop until you get into 2019 when you start to see inflation. But once these bonds break, I mean, it's hard to say where they're going to go to. I mean, they've been going up for 40 years. So, bonds are a very important market. It's one of the most important markets on the board, and I would approach them just like cattle and hogs. Don't buy them. Don't buy them. Wait for rally, then probe the short side.
Yeah, I think you're exactly right. Everything that I've read, it's almost a lock that the Fed is going to raise interest rates in a couple weeks, and that should put pressure against these bond futures. There looks like the good chance that the Fed's going to raise rates again in December, which leaves us, a fair amount of time between now and then to sell rallies in this market. Is today this up day? Is this a selling opportunity, or is there more to come? Are we going to go back and challenge these highs from the month of May?
Well, the number that I've been telling people to hold off for before you sell bonds is when you see those front bonds get north of 145.15. Now, the other day they spiked through there and got up to 146, but when they came back through, they dropped them sharply. So if you're going to trade bonds, you wait for that front month contract to get up to 145 to say 146, and then probe the short side. But the thing that trade's not taking into consideration is this rapid job growth in the U.S., because you may put the Fed in a position where they're going to have to hike rates more aggressively and sooner. And so, when I describe the bond market as a bubble of historic proportions, I am not exaggerating. And as much as I hate options, and I detest options because most of them go off worthless, the next time you get these bonds up around 145, look for some way out of the money puts. Buy something like a 140 or a 139 or something. But on the bonds, anytime you get a stiff rally, sell them.
Yeah, I think it's a great play, and one I totally agree with, because we have a really fast growing economy, and in fact it's too fast. We're going to have inflation. We have to raise interest rates to moderate this, and it's going to really put some pressure against these bond futures. So we just came off of our low. This is a September contract, but in that 139.16 area, a rally up above 145, 146 certainly should warrant a lot of selling. And I know you were shorting bonds. I know just recently, maybe last week or so, I think you sold them in this area, and then took your profits just yesterday, I think, down here near the lows.
Yeah, but keep this in mind as well. One of the reasons they pulled off that hat trick in the bonds, running from 139 up to 146, was these fears coming out of Europe regarding the Italian economy.
Yeah.
And I don't think those fears have been put to rest. So just understand that, you could goose these bonds back up to 145 if the problems in Italy continue, but they're not going to override the fact that the Fed's going to hike rates, and the Fed hikes rates to keep other markets depressed. So bonds are a bare deal. It's just a matter when they finally kill it.
Yep, absolutely. So there's rally opportunities, and those opportunities in your mind, selling opportunities in cattle, selling rallies in hogs, sell rallies in the bonds.
Absolutely. I think, and again, let me just say this, in terms of probability and profitability, the short side of these back month cattle and hogs ought to be a good trade.
Very good. Jerry, appreciate your time today. You've done an excellent job. Want to give listeners a chance one more time to talk about your website, how they can order your book, sign up for your newsletter. Is there a free trial or anything that they can get?
You want to go to www.commodityinsight.com, www.commodityinsight.com. My book is 758 pages long. It'll keep you busy. It covers the years 1990 to 2015. If you are haunted by markets like I am, you'll enjoy Haunted by Markets, my book. So take a shot at it.
All right. There is you should be able to see it on the screen now, a look at the website. In the book by Jerry Welch. You just click on this link. It'll take you to the book, and you can.
Brian, I hate to interrupt you, but let me say this: the book is an ebook. It's not a hardback. You download it, you read it off your smartphone. You download it, read it off your computer. It is an ebook.
That's the only way to go in this day and age, right?
It really is. It's pretty slick because you got your phone with you. You can read it anywhere. And as I said, it's 758 pages. It covers, 25 years of the big four: stocks, bonds, currencies, and commodities. And so far, people love it. So.
Awesome. Great to hear. Great to have you with us. I enjoy your newsletter every day. Enjoy visiting with you. Thanks, Jerry. Appreciate talking with you today and for your time.
Listen, thank you, Brian, for having me.
Absolutely. Talk to you again soon. Thanks, everybody, for listening. Brian Hoops here with Jerry Welch, and we'll talk to you again soon. Contact any of our offices. Contact Jerry. You can go to our website, get information to reach out to him at midwestmarketsolutions.com. Have a great day, everybody, and thanks for listening.